Bloomberg Quint's senior-most editors, weekdays at 8 a.m.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our expert then, Kalra of Target Investing and independent investment advisor Vivek Mavani join me on the show. Thank you to both our guests for joining me on the show. Today on Hot Money, we'll discuss Tata Consultancy Services, the oil marketing companies. We'll talk about United Breweries and the numbers, and we'll talk about Tech Mahindra and the numbers going ahead. What's the view going ahead? Let's start with the first stock, and that is TCS. TCS has almost hit a market cap. In fact, on an intraday basis, it did manage to hit a market cap of 7 lakh crores. But the counter seems to be cooling off post, how the currency has behaved in the past few days. But what's the view ahead? And the big question we're asking is a market cap of 7 lakh crores justified for TCS compared to what's happening with the peers? We'll ask our guest. Samir, your view on TCS, market cap of 7 lakh crores, is it justified according to you?
See, if you see the market cap, then there are three things. The result came out better than street estimated, so that gave a leg up. And recently, the rupee depreciated quite a lot in a shorter time. So that helped out large IT companies for the money flow to come in because they are more liquid. So it's much more easier to hedge your portfolio because of this export-oriented companies. Second, the market correction which happened or the stabilization of the market has led to a lot of money shifting from the cyclical to defensives. So again, that kind of liquidity benefit came to TCS, and Infosys is lagging behind it. So I think justification is not done as of now because there's a lot of flow being pushing the market cap, but it's not something which will slow down currently and in the shorter term.
Okay, so that's the view that's coming in on TCS. Vivek, what's your view on TCS? Are you happy with the market cap, or now will you be cautious at a 7 lakh crore market cap?
Well, I'm quite comfortable with whatever the number is. I mean, about a month back, it was when it crossed $1 billion. I mean, the media made a big deal out of it. 7 lakh crores, again, a big deal is being made out of it. The issue is not about the absolute level of market cap. Probably in a couple of years, it may be 10 lakh crores for all you know, maybe in the next 2-3 years. The key thing is, why is the market or why are market participants willing to give that kind of a market cap to TCS? And the answers are superior growth, consistent growth, which looks sustainable, very high return on capital, return on equity, free cash flows, dividend payouts, and last year they also did one of the largest buybacks among Indian companies at almost 40,000 crores stock bought back. So all of those factors put together probably justify this kind of a market value. Even today, if we are looking at 7 lakh crores, I mean, let us not forget it is only still about 22-23 times current year earnings.
Vivek, I'll come to your time is up on the opening statement. I'll come to you on this thing. So I think our guests are pretty much comfortable as far as the valuation is concerned of TCS and the market cap is concerned. So I'll come back to Vivek. He was finishing his statement. Firstly, numbers, you spoke about it. I think fourth quarter numbers were really strong, but at least 4 or 5 quarters before that, they were nothing spectacular. They were pretty much muted numbers. So that was my counter to your saying that it's delivered numbers consistently, and your view on the valuations, because if you're looking at it, TCS is equal to all the entire IT companies put together, large 5 plus another 1 lakh crore. So either TCS has to come down, or are we missing something on the smaller companies?
Well, a fair point you have made that TCS market cap is top other, I mean the next 5 companies plus 1 lakh crores and so on and so forth. I wish you could also show a visual as to in terms of EBITDA or in terms of profit after tax, what is TCS equal to in terms of how many companies, I mean they generate earnings equal to how many companies, whether it's the next 3 companies, next 4 or next 5. And that pretty much will answer your question whether that 7 lakh crores equal to top 5 companies plus 1 lakh crores and all that. I mean, the same also would be the case with the profits. I mean, TCS is a humongous profit machine, both in terms of size as well as growth. To come back to your question, in terms of 4 quarters ago, the growth was nothing spectacular. Well, 4 quarters ago, globally, most tech companies, I mean, barring the FANGs in US, most tech service companies, including the Accentures of the world, including IBM Global Services, which is a service side of the IBM, which is more comparable to a TCS, Infosys, etc. All of them had a growth slowdown. So, in any growth sector or a company, through its life cycle, will always have periods of high growth and low growth. Perhaps last year and maybe 2 years, I mean the period between 2015 to 2017 was period of low growth. The high growth trajectory is back, and TCS is not an exception. All IT companies, including Infosys, which probably had the longest spell of zero to low growth over the last 3-4 years, has also returned back to giving much more positive outlook and profit guidance, if I may say. Which is quite out of line with what they did in the last 2-3 years. So it is a growth trajectory which has come back. And to take the point of what Samir mentioned, that it is the simply the fund flows and liquidity in the market which is going towards that sector, but that same liquidity and the investors had deserted this sector 2 years ago, and doubts were being cast whether India's IT service model is sustainable. Probably these are dinosaurs which just go extinct. Everybody was underinvested, and now all that fund flow is going back to just get back to that level of weightage in the global portfolios. Let's also I'll also add one more thing. For global investors, especially a lot of ETF money which comes into India, there are very few options for them in terms of large companies with significant liquidity in terms of investment options. TCS ticks all of those boxes, and rightly so. Why the fund flow is going in favor of TCS. So for me, it remains a buy on declines in terms of a sustainable growth story, given the growth of high teens or even mid teens. I'll be okay with 12 to 15% growth also. I'll be okay with over a longer term period. Dividend yields and valuations at about 22, 23 times current year numbers. 2 years forward will be less than 20 times. I'm quite okay with the valuations.
Okay, we've got a couple of queries that have come in, mainly on account of is TCS, it is a good price for us to enter TCS. So there are a couple of queries, and someone is asking in terms of Asha Bakshi is asking, can TCS touch levels of 3700 soon? Would you want to help our viewers?
So
is it a good time to enter? If someone wants to enter TCS, is it a good time to enter?
If you enter now large cap ITs, you have to be clear. Value appreciation might not come every year, and it cannot be double digit. It will be more about buybacks and dividends. So that, I think, it's a place where you can start building up a position. It cannot be the 100% investment has to be done right now, because I see a certain downside risk as well.
Okay, so that's the view that's coming in on TCS at this point of time. We'll move on to the next stock, and the next stock are the oil marketing companies. Most of them have corrected significantly, and then post the news coming in terms of how what's happening with the global oil space and crude prices coming up down by almost 7 to 8%, and the rupee also correcting in a significant, appreciating in a significant way. Most of the oil marketing companies have managed to rebound. So the big question we're asking is the bottom in now in place for the oil marketing companies. Samir, your view on the oil marketing companies, should someone accumulate? What's your view?
So I think in the shorter term you will see a bounce because of on 22nd June the OPEC and Russia meet up, and they've already given a feeler that they want to cut around increase around 1 million barrels per day. But I think the major risk on the downside is the Iran sanctions. It's a 1/3 of the producer of the total crude, and one of the major oil traders have already said that this time it will be very difficult to bypass the sanctions, which have been done earlier. So I think there's a medium term downside, but on a shorter term, I think if the supply increases, there'll be an upside to the OMCs.
Okay, what about you, Vivek? What do you make of the oil marketing company?
Well, two, three things that I'll focus on. Firstly, a disclaimer that I'm no expert or an authority on global commodities, especially the geopolitical issues which tend to determine crude oil prices. crude oil prices and oil marketing companies tend to have an inverse correlation, and we have seen that over long periods of time. I am not really a fan of policy, and I don't blame the government either. We are back to the period of under recoveries and cross subsidization of oil products. So obviously the current petrol and diesel prices, although they have risen significantly in the last 3 months or so, there's an opinion and multiple financial studies that even today the prices don't fully cover the costs. So there is a subsidy element which is coming back. Now government is evaluating multiple options in terms of how those under recoveries can be.
Vivek, I'll have to get back to you because that was the opening statement. But let's get back and open the discussion. You can continue, Vivek. What exactly is your view? And among the three, which one is the better one?
So for me, I'll avoid these. What at best we'll have trading bounces of maybe about 8, 10, 12% for movements in crude oil prices and perhaps even currency prices. But generally, the view seems to be that crude oil may not stop at 80. Between 40 to 80 over the last more than 6 months, it has been relatively a slow and steady climb without any meaningful correction. So perhaps in a medium-term uptrend, this could just be viewed as a correction. I am no expert or authority on that. But if the view on crude oil prices is bullish, then one really can't be bullish on oil marketing companies simultaneously. We are also in an election year, so sharp increases in fuel prices will also not be something practical option for the governments. Cutting taxes may also not be practical, given that the hit that they may have to take on the deficits and so on and so forth. So for me, it's clearly a no-go area at this point of time. Just avoid it. I'm not here to play for that 8 to 10% trading gains, which I can't really predict or which I can't time, because it may happen for factors which are beyond my understanding.
Okay, Samir, most of the oil marketing companies have corrected almost 50% from their highs. No doubt they were trading at very cheap valuations. At this level, are valuations attractive? And of the three, which is, if someone is looking to take exposure into oil and gas oil marketing companies, which is the best pick among the three?
So if you really want to enter this area, I think BPCL is the place, because HPCL has already facing that ONGC and takeover issue. And if you see the capex wise, BPCL is much more lighter on the capex compared to HPCL and others. So I think the cash flow generation will be better off for BPCL. And as far as increasing the prices, see, if it was the election year and so election year, if Karnataka elections were to be influenced by the petrol prices, after that every day there has been a 10 to 15 paise kind of a price increase. So it's not that because it's election year, so the price increases will stop. It might be postponed and the delay might be lagging, but they are being allowed to raise the prices to even a record high, even during an election forthcoming and in the history. So I think BPCL is the place if you really want to play out, but I'm more positive on the crude going really up from here also.
So would you look at the other oil companies like an ONGC and Oil India, which will benefit? But somehow they have not been doing it, because one of the reasons was this windfall tax that came in. But even if you exclude that, despite crude coming in from 30 to 80, these companies have not moved at all.
Yeah, so if you see that in December, we were always informing our clients and even on the show that crude we expect to be 80 and it touched that. Now what happens in the ONGC, if you go back in the history, and when it was $100 in 2014, the windfall tax, which everyone calls, they were a subsidy of around 31,000 crores. And total was around 56,000 crores of subsidy which was being provided. Over there, the main reason was the deregulation had never happened on the OMC levels. So the price increases were not allowed. Now what happens whenever that move of $32 to $80 came in, the benefit was still lagging behind. And then when the actual results are to be announced, this windfall tax story came. Same happened in 2014. But if you see from that point of that fall, it went to 155. and within the same year it went to 230. So you saw a good increase in prices on the second half, because second half of the year has more oil consumption. So even if they increase by 1 million barrel per day, the consumption will absorb it. So I think that rationalization will come in, and if it doesn't go up, and it hasn't gone up, then when the tide turns, it really super passes everyone, and then you're not able to catch it up.
Okay. So I think that's the view that's coming in from the oil marketing company. Not the best bet at this point of time is what our experts are talking about. And the next stock we want to talk about is United Breweries. Came out with a strong set of numbers. The counter did well in trade, but surprisingly by the end of the day managed to correct. Today also it's trading much lower. So what's the view? Should someone look at this fall as an opportunity to accumulate? Samir, I'll start with you. What's your view on United Breweries? What did you make of the numbers?
So numbers were good. See, again, you have to take into account that demonetization and GST are in the base here. So any kind of volume growth everyone is showing on the consumer end has to be double digits or more than double digits. The plus point for them became that the molasses prices were really down.
Okay.
And that helps them even in this quarter, which is April and June. But now onwards, I think that effect will start to get off on quarter-on-quarter basis. So I think that kind of got adjusted when the results were announced, and everyone is doing more of a real-time price adjustment to the stock rather than, giving it a future value on that basis. So I think it's a avoid for me as of now, and I feel that the benefit of the raw material has gone out.
Okay, that's the view that's coming in. What's your view, Vivek? I don't think you track it, but do you have any kind of view on the numbers?
No, so I don't have a view.
About the numbers, can you...
No, so I actually, because I don't track it, I've not had a chance to even see the numbers. So I'll reserve my comments at this point of time.
Okay, I'll start with you. Was there something in the numbers that, missed people? Because it opened it up almost 5 to 6%. But it has managed to correct significantly. Did the street miss something on the numbers?
See, if you see, that has happened to a lot of companies this quarter. What has happened, everyone has been, earlier what used to happen when you're showing a good result, the investors used to give you a higher valuation quarter on quarter as well. Now what is happening when everyone turns cautious? So you take it as an exit price for the short term. So it might move ahead also when these couple of weeks out of post results go out. Same happened with Jubilant Food. The results came up, the stock also flattened out, came down. Now again it started the up move. So I think that same thing happens, and the short term investors who are there for that 3 to 4 months kind of a upside, when they get that upside, they book up, and that puts the pressure on the short term.
What could be the key re-rating trigger for United Breweries? You're not too bullish because of the raw material prices. Is there something that you're looking at that could, if someone is looking to enter, what could he or she monitor at this point of time?
So I would see two things. One is Heineken actually taking the control over the whole system. So that would give a different kind of evaluation what it deserves right now. And second is the beer market itself is having a lot of private competition now. If you take that Bira beer which is coming, and a lot of imported is coming into the restaurants. So I think if that competition, even after that, it's able to show that double-digit volume growth in future quarters, I think that's a place where everyone gets certain that this volume growth is sustainable and not something which gets out of system.
Okay, Vivek, you don't have a view on United Breweries, but do you have a view on the entire alcohol space? If someone is looking to play this, is there some stock or any overall view on this space?
See, actually, my not tracking it closely has also got to do with, like, although the sector has growth, it is an obvious space that something like liquor and beer and any kind of intoxication is going to, like, always have a very high growth potential, and it has all of those makings of what we have in an FMCG or any other growth sector. On an unorganized, unbranded to branded organized sector shift, which will probably go on for a very long time. But the trouble with the entire sector is that most companies tend to have a lot of question marks and doubts on the management quality, corporate governance issues, accounting disclosures which leave a lot to be desired, and so on and so forth. So I've looked at them in the past and not really been satisfied with those things, and hence don't really track them. So for me, it's again a sector which is a no-go area. I may lose out an opportunity, but I'm okay to lose the opportunity, but not be. But I don't want to be hit by negative surprises which keep coming the way for the sector from time to time.
Okay, so that's the view that's coming in on United Breweries at this point of time. Not the best stock to accumulate at this point of time, according to our guest. And the final stock we want to speak about is Tech Mahindra. Surprisingly, the counter has corrected 5% despite posting decent set of numbers. What's the view on Tech Mahindra going ahead, and what do you make of the numbers? We'll ask our guest. Vivek, you go first. Tech Mahindra, what did you make of the numbers and view ahead? You have 1 minute.
Well, one more Tech Mahindra, one more quarter of positive surprise in terms of growth led by manufacturing, digital, and the enterprise business. On a YOY basis, double-digit, mid-single-digit growth on a quarter-on-quarter basis, and obviously a positive surprise on margins. I mean, another almost 180 basis points of margin improvement in the fourth quarter, in line with their guidance earlier in terms of expanding and improving margins, and Tech Mahindra has lived up to that. Valuation wise, fairly attractive among the large cap IT companies. Tech Mahindra is the 5th largest, and in terms of valuations, just at about 15 times current year earnings, perhaps about 12-13 times next year's earnings. Fairly, I would say, underpriced, and if they continue with the consistency in their performance, a very good re-rating candidate.
Okay, re-rating candidate. And Samir, what did you make of the numbers, and will you accumulate Tech Mahindra?
See, if you see the numbers, if I remove the other income, it wasn't a great number.
Okay.
If you see quarter on quarter, because that's the place where if the valuations really run up, that's the part which supports the valuations going further. So if you see quarter on quarter, it wasn't that that kind of a growth which supports that kind of a valuation. So that's why I think the prices have come off, and I think it will be further reduction to the prices because the other income almost doubled. So it was 235 crores in last quarter, same year, and it was 440 if I'm not wrong in this quarter. So that kind of a support came to EBITDA, and that kind of a support came to the PAT. So nothing to take away from them, but if that kind of a valuation, I rather invest in Infosys, which is a top holding for us, and I think that's a better place to be in.
Okay. So that's the view that's coming in. Vivek says that it's a good stock, nothing to lose, but Samir says that he would prefer Infosys at this point of time. We'll open it up for discussion. We have a query from Rahul Kamda saying that it's fallen almost 10% from the 52-week high. Is it a good time to start accumulating Tech Mahindra? So I think our guests have fairly much answered that. Vivek has indicated yes, it's a good time. Well, Samir, would you accumulate Tech Mahindra if your preference would be Infosys, but just to help out Rahul?
Yeah, you can, but the only point is that reason of that 52-week high and 10% being down. I think there's a lot of profit booking happening over there from the institutions as well. All the brokerages came out with a reduction in target prices. So there will be a further downside as well. So I think it's better to stay away and then accumulate at a lower point.
Okay. Vivek, what's your pecking orders now, since the top 5 IT companies have already declared numbers? What would your pecking order be among the top 5, or would you prefer a mid-cap IT over a large-cap?
Well, among the, so it's not so. I'll take the thread from what Samir mentioned as well as your question. It is not large cap or mid cap. It's not choice one versus the other, nor is it a choice between Tech Mahindra or Infosys. For me, it's both. In terms of preference, it's TCS, Tech Mahindra, Infosys. Maybe for Samir, Infosys comes first, but I would have both in the portfolio with perhaps lower
anything that you
weightage.
like in the mid-cap IT space, or they've run up too much?
In mid-cap, I would say Persistent Systems is again a company that has been delivering. They've had certain setbacks. They gave a revenue and a profit warning, but I think Persistent Systems should do well, and I'm positive and hold it on behalf of clients in certain portfolios. So in mid cap, that's the thing. I mean, I've got about 4 IT companies, 3 large, 1 mid cap, and I'm fine with that.
Okay, and what about you? Pecking order? Infosys probably will be a topic you've been saying.
Infosys, TCS, and Wipro.
Wipro.
Yeah.
What makes you bullish on Wipro? Wipro is not performing.
See, that's where we come in. As in, certain times you have to pick companies when they're not performing. It's not that historically they've never performed or they've become a large brand. They've become good. There are certain management changes taking place. So I think that will pay off, but it'll take few quarters to get that payoff done. And I think that will happen in further 2 to 3 quarters.
Okay, and what do you make of the currency? The currency has now started to move in the other way. Most of the IT stocks did manage to rally because of how the currency was moving.
So
is that a concern?
I think the whole market right now, whether it's bond, currency, is all linked to crude prices. So if they heat off in, if they come off really well till the announcement actually comes from OPEC, I think that will help out and the currency will come down. So that's why I'm a little conscious on the shorter term.
Anything you like in the mid cap IT space?
Mid cap persistent because again they're facing issues. If they are long sustaining issues, we have not actually bought in right now, but we are looking at it for a couple of quarters.
Okay, so that's the view that's coming in on the IT space. I think persistent was a common thread that both Samir and Vivek spoke about if someone is looking to invest in the mid-cap IT space. Among the large cap, I think TCS, Infosys and Wipro is what Samir likes, and TCS, Infosys and Tech Mahindra is what Vivek likes at this point of time. So it's a comprehensive view that we are getting in. But with that, it's a wrap on today's Hot Money. Vivek and Samir, thank you so much for joining me on the show today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.